Yo, yo, yo. I just want to break down the setup of breakouts and discuss the probabilities of and based on the risk reward of them. Previous in my trading li- life, I suppose, I thought breakouts, the nearest target was the most, you know, easy to capture. But it's not actually the case. In breakouts, um, when it breaks a low, actually it has a decision to make. Is it going to continue or is it going to turn around? And I know that every tick on the chart has the decision: is it going to go that way or this way? I understand that, but from what I've discovered, um, through many, many, many trades and many back testing, is that when something breaks an important low or an important high, um, there's orders being filled. There's orders being, it's based on what the market wants to do. It's basically an indication of is the is the price going to move, or is the price going to, this is just a show. So let me a show to get people stopped out. Let me just show you. So a breakout is a bearish bar, a large bearish bar like this, and then before it breaks that large bearish bar is low, it comes up, not all the way, but somewhere around here. If it goes towards the open, I'll label it differently, but comes up around here and then comes down and then pops that low, and that's where we enter the market short as a breakout. Because I've seen countless pictures of this, of where, and you can look at a chart and you will see this image. You will see this image, a split. It's called. I call it a split. Whoa, that was a bad one, but you know what I'm saying. Like where it creates a split. um, that's one solid bar. You know what I'm saying. But before it gets that way, it looks this way. It looks like this. And you have to basically bet if this thing is going to show that or not. And that's a breakout. And oftentimes, following a split, say it goes down this way, following a split, it can still rip. It can, okay, now it comes up, but it's already created another supply zone, which it can bounce off of. And eventually, you can capture a huge risk reward on a relatively small risk. The problem is that it is extremely risky, because what happens so many times now, which is why I created the anti-breakout, which I'll get into right after this, which is the exact opposite of this trade. But as this thing breaks out, boom, it just broke out, let's say. Now it's coming down a little bit. This is the most risky part of the trade. In no other trade, in no other setup that I have, is this the riskiest part. The riskiest part is when it's, far away. It's done its magic and now it's far away. We don't know if it's going to turn back or not, and that's all the juice it had. No, breakouts, the moment it breaks that low, the moment you're in the trade is actually the riskiest part, because what happens so many times is it pops that low, because this is an important low. They know that there's stop orders sitting there, and if it's obvious at all, they know there's orders there. So what they do, in my opinion, whoever they is, I see it all the time. There's people that breaks that low, and then it eyeballs this high, and it works its way up. It works its way up. It works its way up to break that high and then stop me out. And then it can do whatever it wants. And actually, that's a sign that price is not gonna go downwards. Not actually, because if price were to go downwards, it's going to move, and price is showing that the whole reason it showed a bearish formation like this. This is a bearish formation. This is a bearish continuation pattern. Drop, base, drop. And if it drops, but only to fake people out, that shows that it doesn't want to drop. It actually just wants to play games between here and wherever it came from. It's play games. And there's plenty of games in the market. There's plenty of rectangle moving nowhere except going back and forth. And that's why there's such a thing called the anti-breakout. And the anti-breakout is this. This stop becomes your target. That's right, target. And a 1-to-1 stop loss, or a 1-to-1 target, becomes your stop loss. That's your stop. This is the move. This is the move. In my opinion, it has been the highest performing setup that I have yet. I mean, given the high frequency, breakouts are high frequency, anti-breakouts are high frequency. A lot of my zones aren't. So minus the zones, like holding levels and zones like that, those are a little bit more. Those aren't comparable though. It's like 4 trades for every 20 of these, so it's not comparable. This is a money making setup, the anti-breakout. Now, anti-breakouts can still go upwards, but that's not the bet. The bet is that it's gonna break this high, because it's like, all right, this is obvious. It's showing downwards. It's coming from the top here, and it boom breaks this low and pops upwards again, and you're like, you pretty much know it's in the bag that this high is gonna be squashed, and then you sell at the high, boom. It takes like 25 seconds or less, bro. I mean, really, really quickly. I can have my entry and stop. And the coolest thing about this is that it's not dealing with a market order. When it breaks this low, this is a limit order. So that means I'm for sure getting this price. On the breakout short here, on the breakout, I have to have a market order on this low. So if it breaks this low, I'm in at market. And sometimes you can catch slippage at 25% in the zone. I mean, you can get slippage minus 25%. You're really only capturing 0.75 if your target's a 1-to-1. So it does matter. It does make a difference depending on the slippage. And generally, you want there to be a slippage on that. Why? Because that means that, oh shit, you're onto something. You're probably right, because it price ripped the low and it popped and it barely got you in at an okay price. That means it's competitive. A lot of people shorting. So generally, that's a good sign. You can actually use slippage as an indicator to have a higher risk reward. So if I see that and like, oh, there's other people on board with me, and I'm not just getting out at a 1-to-1, I might set targets here, 2-to-1, 3-to-1, because there's other people with me, and yeah, that means a stop loss is more beneficial for the people who want to reverse the market, but they still have to reverse the market, and that takes effort. That takes energy, because the energy is short. That's why it slips downwards. The energy is going downwards, and that's the trend. That's what a trend is, in my opinion. So the main priority is like, because right after this low, this is the hot spot right there. I mean, minus pretty much all of this. Let's just do a new one. Show it from the upside. All right. Let's show it from the upside. Big bullish bar coming from, okay, that's a big wick. That's fine with me. Comes down. Oh, now it's going to break this high. Oh, shoot. It's going to break this high. All right. All right. I see you. I'm going to take entry right here. My stop loss right here. That's a breakout. That's a classic breakout, especially if it's coming from this way. I mean, this is an uptrend. This is breakout. This is breakout city. You can probably capture a 1-to-1 out of here. Now, The anti-breakout is the opposite, of course, but in this case scenario, it depends on what I'm seeing. It depends on what I'm seeing around here, meaning price movement here. If there was a rally base drop and then it got to there, you know what I'm saying? So we see some type of zones here. I probably don't want to be long unless I think that this zone's bogus. And if it's not, then I'd likely do an anti-breakout because then I'm getting this zone picture short along with this anti-breakout short at the end of a trend. But this doesn't look like the end of a trend if it just recently dropped and popped. So that means it's the trend is actually downwards because the price came from up here down. Oh, it's just coming up for a retracement. That's when you get on board short. So I would go short here based on what I see. Based on all these scribbles, I'm going short. Here's that's the stop, and that's not arbitrary. That's based on this target. It's target based. It's this breakout trade, exact opposite, the exact mirror image of that. And then I'm short, hoping for, it pops, it thinks about it, and goes down. But if it prints bullish like that, that's not a good sign either, because that means that solidifies that distal line to have buyers. And then this window has buyers, protecting my target from being hit, which happens. But still, just because there's a group of buyers doesn't mean that price is not going to go your direction. Just because there's opposition doesn't mean it's going to not work. There's going to be opposition everywhere you go. Mostly opposition that you don't even see, because I don't even freaking know really why people are buying here, but there could be a group of buyers there. I don't know why. It means nothing to me. It's not an open, it's not a high, it's not a previous high that's broken, nothing to me. But there's sometimes random groups of buyers that I notice. Actually, most times, I can probably only see like such a small percentage. But anyways, what was my point? My point is just that this area right outside of the target, if you're going a breakout, this area right here, right when you get in, is the riskiest time. That is the deciding factor that, okay, right when you get in, boom, it's going to lose or going to win. I don't know that's to every trade, but generally anti-breakouts, when they work in the front half of the zone. They work in the front half. You probably don't need to have your target at, a stop loss is at 1-to-1 based on that. You can probably have it smaller, but I'm not going to do that. But it turns at 25% of the time, most of the time, if it's going to work. If it's not, it can rip. That's fine. Breakouts can happen. That's the fundamental. When I'm looking at this, when to take an anti-breakout versus a breakout, this is something that I'm always considering, weighing back and forth, because I identify the breakout, and now we got to decide if we're going to take literally the breakout or the exact opposite of that. So what are we doing? And it's based on, what the picture is and everything, but yeah, I forgot my point. But yeah, I forgot my point. I don't know. I don't know. I do want to say just one thing. How to choose from breakout to anti-breakout. So what do you do in this situation? Okay, well, I'm probably going to, if this is the case and this has just begun, the long side, I'm probably going to go long. If this is a zone from up here, boom, and then kind of something like it tries to, and then go down and up, then I'm taking the breakout. Because, this is what I remembered now. Fundamental, like a righty, there's more righties than lefties. Fundamentally, breakouts are first. Breakouts, you should think about breakouts first, and then anti-breakouts after that. I don't say trade the breakout. I'm just saying think about automatically, okay, yeah, this is the breakout. I want to go long here. And then double check to verify, like, all right, I do want to go long here. Do I want to be a buyer right here? Do I want to be a buyer right to the left of this, right where price is going? Do I want to be a buyer? Do I want to buy this conglomeration here? And sometimes the answer is yes. Sometimes the answer is like, no, I don't think that this zone is going to work. It's a bunch of baloney. Um, it's, if anything, is just going to trap some sellers, some stupid sellers, in my opinion, based on whatever I think. The freaking candlesticks or whatever. It's spent too much time there, whatever. Because I know that if price spends a lot of time somewhere and then comes up and then comes down, it's going to likely go right past this conglomeration right here. It's probably going to go past that because that's just what happens, in my opinion, most of the time. Everything is a percentage basis. We do not know. Just saying, everything's a chance. I know that one, but anyways, so I'm taking the breakout. So my stop loss is here. My target, my entry's right here. Boom, I'm in. My target, I think I can go up a little bit more. I'm gonna go for a 1.25 to 1. That's my target. Boom, send it, and there you go. That's the breakout. And then hopefully, let's say this prints like this, comes down again, goes upwards, and then floats that way. That's a holding level creation that I just created. But I got in on the breakout stage of that, whatever. So, and another thing to note, because this is a market order and you may get slippage up to like 25% or something like that, depending on the trade, I think going for less than a 1-to-1 is bogus. It's bogasteracy. It's bogasteracy. Because you're going to get slippage and then you're going to only capture from here to here, a 0.5 to 1. And that's just bogasteracy. You can't do that. That's so little reward for so much risk, because now you're risking from the 0.25 to your stop loss. That's not okay. So because it's a market order, due to that market order nature, you need more than a 1-to-1 or a 1-to-1 or greater. And that's what a rule I'm implementing on all my breakouts, all my market order style of entries. 1-to-1 or greater, bro. You can't be dealing with something small like that. So, yeah. So yeah, that's how breakouts work. All right, peace.